This indicator's so accurate at predicting breakouts that several prop firms actually banned their traders from using it. They said it gave an unfair advantage in identifying consolidation zones before explosive moves, but now it's back, completely rebuilt and stronger than ever. And in this video, I'm going to reveal exactly how this controversial indicator works, show you the advanced detection methods that made it so feared, and give you the complete trading system to profit from range breakouts. Let's get into it. First, head over to TradingView and pull up any chart you want. I'm using the 1-hour time frame on pound yen, but this works on any market, any time frame. Click on indicators and type in consolidation range with signals. Make sure you select the one by Zierman. Now, this isn't your typical support and resistance tool. No, this is much more sophisticated. Most indicators only show you ranges after they've already formed, but this one predicts consolidation zones in real time using advanced mathematical detection. You've got two powerful detection methods working together. First is the ADX-based trend strength analysis. When the average directional index falls below your threshold, it signals weak trend conditions, perfect for range formation. Second is the volatility compression detection, which analyzes standard deviation, variance, and ATR simultaneously to identify periods of extreme low volatility. But the dynamic range band system is where it gets really powerful. It builds adaptive boxes around these zones with automatic take profit and stop loss projections, so when price breaks these ranges, you get instant breakout signals with pre-calculated TP levels. Now, to get maximum accuracy with it, let's optimize your settings. Double-click on the indicator to access the settings panel. You'll see the range detection method. For most markets, I recommend starting with volatility mode, as it catches the tightest compression zones. Next, set the range period to 14, as this determines how many bars are analyzed for trend and volatility calculations. For the range multiplier, you want to set this to 1.8 to scale the consolidation zone width perfectly, because too low and you'll miss valid ranges, too high and you'll get massive boxes that never break. Now here's the controversial part. Enable the SLTP system with these exact settings. TP1, multiplier 1.0, TP2, multiplier 2.0, TP3, multiplier 3.5 SL, multiplier 0.8. This creates tight stops with massive reward potential. Set the cooldown to 5 bars to prevent signal spam during choppy breakouts. For ADX settings, keep the threshold at 25 with smoothing at 14. This filters out strong trending periods where ranges are unlikely to form. The STD dev, variance, and ATR multipliers should be set to 0.8, 0.7, and 0.9 respectively, as these fine-tune the compression detection logic. Most traders struggle because they rely on random signals without a clear system. That's why we focus on structured strategies and automation, so you can study how these tools work step by step, without guesswork or emotions. If you want to learn more and see exactly how these strategies are applied in real market conditions, click the first link in the description. Disclaimer: this is for educational purposes only. Trading carries risk, and no strategy can guarantee results. Now, let me show you the two main ways to profit from this tool. For breakout trades, this is where the indicator made prop firms nervous, because it catches breakouts at the very beginning. Wait for the algorithm to draw a consolidation box around price action. You'll see clean horizontal lines marking the range boundaries. But you want to be patient here. You want to let the range mature for at least 8 to 10 bars inside the box, as this ensures genuine accumulation or distribution is occurring. Next, monitor the range quality by watching how price behaves at the boundaries. Clean bounces from the edges indicate strong institutional interest. When price finally breaks above or below the range with volume, you'll get an immediate breakout signal with all 3 TP levels automatically calculated. For perfect entry, wait for the candle to close outside the range boundary to prevent false breakout entries. Enter on the next candle open in the direction of the break. Let the trade run, and as you can see, it was profitable. For mean reversion trades, this strategy uses the range boundaries as high probability reversal zones. When price approaches the upper or lower range boundary but hasn't broken out yet, you're looking at potential fade opportunities. The key here is waiting for rejection signals at these levels. Doji candles, long wicks, or volume spikes without follow-through. Enter counter-trend positions targeting the opposite range boundary. This works especially well when the ADX is below 20, confirming weak trending conditions. Your stop goes just outside the range boundary with targets at the middle of the range and the opposite boundary. The beauty of mean reversion range trading is the high win rate because ranges hold more often than they break. But when they do break, your stops are tight enough that the losses don't hurt your overall profitability. Here's a pro tip that made this system so controversial. Watch for multiple time frame confluence. When you see range formation on both the 1-hour and 4-hour charts simultaneously, the eventual breakout is almost guaranteed to be massive. The algorithm detects these multi-time frame compression zones automatically, giving you setups that institutions pay millions for. That's exactly why some firms tried to restrict access. Retail retail traders were getting institutional-grade analysis for free. Before I show you the next strategy, remember this. Learning indicators is one thing, but applying them within a structured process is what really matters. That's exactly why we've created a place where you can review these strategies, see live examples, and study them in real market conditions. Just click the first link in the description whenever you're ready to explore further. Disclaimer: this is for educational purposes only. Trading carries risk, and no strategy can guarantee results. Different markets have unique consolidation characteristics, so let's optimize for each one. For forex pairs, set range period to 20 and range multiplier to 2.2 for major pairs. Forex ranges often form during session overlaps, so longer periods capture these institutional accumulation zones better. For crypto, drop range period to 10 and increase range multiplier to 2.5. Crypto forms tighter, faster ranges, but with wider breakout potential. Use volatility mode exclusively, as crypto's 24/7 nature makes ADX less reliable. Set TP3 multiplier to 5.0 because crypto breakouts can be absolutely explosive. For gold, increase range period to 25 and set range multiplier to 1.5. Gold has unique accumulation patterns during Asian sessions that require longer detection periods. Gold responds to both trend weakness and volatility compression. Thanks for watching, and I'll see you in the next one.